Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're live, and it is Memorex. If you'll take a look at this, we are making a 382 retracement as we speak right now. We just hit it, 59.28.50, and this is where if you believe in long, sharply trending markets, this is where you want to sell the S&P. And let's be real cautious because we're only just in a short period of time here. You have to risk 28. You're going to stop is going to have to be at 36. So you're going to have to risk $400 to see if this is going to work. Sell it here, put your stop here. I don't even want to risk all the way up here because this is in a really bullish market. It's still strong, trending down, and we're just going to sell it right there. If you look at this on the gold market, we were doing the same thing just a little while ago, watching it on the 382 retracements. And as you can see, as we went down here, you had a couple of them that were hold on, let me get this up there. There was the first one right here. Let me get it right here. From your high down here to your low, there was your 382 on this one. Then the market came down, all right, made the A, B, C, D to the downside that we just completed right here. Now it's getting ready to make another rally up into this area right here. Now, each of these rallies have been very minor. Okay, if you took the last time we had, look how long we rallied, folks. We rallied well over an hour during that time. And during that time, all it could do, you take that last high, and you can see all it could do was go exactly to the 382. That's where you take time and price together. It's doing the same thing going lower. All I'm doing is looking at strong trending markets, and when they act that way, that's the way you trade them. They don't work all the time, but it's a better than 62% chance of winning, and there's no baseball player that hits 620 and no golfer wins 62% of the tournament. So it's a pretty good idea that you got something working. We have the same thing working here right now in the Dow Jones. Let's just get there. It just almost hit it just exactly. Oh, we missed it maybe by a second here. Here's the Dow Jones doing the same thing, coming straight down. That number is 42338, and we've been to 42335. It missed it by, well, it's still early, so we should get there. Let's just put that there at 28 and see if we get there. We've been rallying an hour, and all the rally has been 100 Dow points. We came down 300 Dow points, rallied up. Now, by golly, if that's not 30%, that's pretty close. So that's what I'm doing is I'm watching these things. I'm putting the odds in my favor. Probability, that's the best I can do. By the way, speaking of probability, we got Mr. Probability Man himself coming up at the half hour. Jeff Hughes of Alpha Insights, one of the top premier investment sites that I have ever seen during the time I've been here on Wall Street and Chicago Board of Trade and America and all that stuff. Since 1959, I did my first trade. All right, let's get this out of the way, and we know to worry about it, and we'll look at the S&P back here a minute. Let's take a look here at the euro, because the euro, we mentioned a couple days ago, it had a chance to start moving lower. And as you can see, it's been going lower. We hit that magical number up here. That was on Monday. We had the retracement here. There's your A, B, C, D. There's your 382 retracement of the high of the previous day. That was done yesterday. We talked about that one, of course. There it is right there. Then we make the A, B, C, D to the downside. Folks, it's just like Mandelbrot said, everything's A, B, C, D if you just look for them, and that's it. There was your low here. You had another rally. All you have to do, go back to the last high, put that in. There's the 382 again. That describes what Mr. Elliott was trying to describe back in 1937, 38 when he was working on Wall Street. At the same time that the king of Wall Street at that time was technical analysis, of course, was H.M. Gartley. Gartley didn't talk about Fibonacci's. I'm almost sure he didn't know it. Otherwise, he would have spoke about it. W.D. Gann definitely knew Fibonacci because he was a 33rd degree Mason, and that's part of their religion is 0.618. And as you can see, we're still heading down here in the euro. Actually, we hit a pretty good support here at this 1.618 of that whole range. So this should be a pretty good bottom here right now in the euro. And let's just look to see if, in fact, it's going to be a bottom. There's your AB. And there's your CD. We're real close, so misses it by a little bit. Hasn't really done very much, so that's what we're watching here this morning. The one that has not given us any chance to get in, which we really wanted to, this was going to be our trade of the day based on the video. Well, the gold was the trade of the day, but this is the one we really like the best, is the ABCD here. And I still think we got a chance. And the reason why I say that is that the back off that we've had here, and this is yesterday and today, it's moved very little. All we've been able to do is drop a point in bonds. That's a good sign if you're bullish. Now, let's just see if that low was exactly 3A2. That'll give us further confirmation. And sure enough, let's get it right there. There it is right there. There's your, I think it hit it exactly, didn't it? Whereas, let's just make sure well, it misses it by one tick. Well, that's pretty close. But that's right on the money as near as I can tell, because that's also an ABCD coming in right there. So that's pretty good support here in the bonds. And not only that, look how little we came down here compared to the last time it corrected. You see, it should have corrected all the way down here, but it didn't. That's telling you it has a little bit more strength. I think we got a chance to get it up here. This would be a 5, 6, 7, 8 day rally pretty soon. And that's the one you want to be getting ready to sell, I would think, because this is our first major ABCD. See how it's taken this many days? All these rest are just corrections. 2-day correction, 1-day correction, 2-day correction. And we haven't had one since way back then was the last time we had one. So this is where we're coming into it right now. I think if we look at the 4-hour chart on this, you'll be able to see the last one that we had. So move it over here like this. There it is. That was way back. Wow, that was, oh my goodness, folks, that's been last month. That was on the 30th of April. We had the ABCD, and then we had the move down. You can see there's the ABCD to the downside, and here's where we are. There's that ABC that I'm looking at, and this is still a bear market, folks. I think the boys on Washington or Pennsylvania Avenue at the Federal Reserve better, think about maybe interest rates are going to be going higher and not lower. But that is a perfect, if we get it, and I think we will. There's the ABCD pattern right here. That'll be up there at 1313. That's what we want to be watching. That'll be really good. But see, this one took well over 10 days to form. This one has only taken 5 or 6 days, so it's weaker and weaker and weaker. It just doesn't appear that bonds have a lot of friends out there. And when you look at the weekly chart, you can see why. You can see this little rally this is what they call a dead cat bounce. Not saying anything against dead cats. Okay, let's check the fly on the wall here. Okay, we got to check a couple of stocks that we were looking at, and one of them, of course, was Tesla, and it had a big move yesterday. And I don't know, I checked it earlier when I was doing Basil Chapman's show, but I forgot to add it to the list here. We'll add it right now. And we got up. Yeah, we're still going higher in Tesla. Had that gap up yesterday. This is, let's review mistakes, okay? Because let's get the daily up, because this is what I was talking. We'll be right back. Jeff Hughes coming up in 16 minutes, so stay with us.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, while we were gone, the the Dow Jones is hitting it right now. It's making the 382 retracement at 422,338, and your stop would be up here at 423,385. You're risking 250 points on this one. If you did the S&P, your stop has got to be 6 cents, but that is a completed perfect three pattern right here. 382. Now there's a small, remember this is an 8-minute chart, but it's still a good chart, just like these were good charts. You can see here, if you drew these ABCDs in here, well, let's just try it, see if it works today, because I haven't done it yet. Let's just try it right here. It's not as easy as I'd hoped. There's your first ABCD. It comes in right there, it pulls up and goes right up to the high. All right, and now it's the same thing we've done here right now. You've got another one coming in right now. Your stop would be right above this level. Okay, now sometimes it works, sometimes it don't, but this is what this is what you're supposed to do if you believe in 382s, which is in fact what I do. Okay, now let's get back to Tesla, because I wanted to go over the mistake that I made yesterday. Now, I just did the trade here. I did the S&P at 28.75, but I should have done the Dow because it was the weaker. It doesn't make any difference. But this is the bar chart and shows the opening and the close. The left hash right here is your open. The right hash is the close. Okay, now the opening price principle basically says that about 75% of the time, the market will open near the high or the low every single day. It'll either open at the high or the low. Now just start at the very top up here. Okay, this one, it doesn't open because it opens in the middle of the range. Okay, the next day it opens near the low. The next day it opens near the high. The next day it opens near the low, at the low. This one opens at the low. This one opens near the low. This one's opens near the low, or near the high, opens at the high. This one opens at the low. This one's opened at the high. This one's nothing, okay? This one's pretty much nothing. This one is pretty much nothing. And then you have opens on the low, nothing, near the low, right on the high, right on the low, right on the high, right on the low. Folks, pay attention to it because it really means something. How it will help you in your trading is that if you're in a trade and you've been in it for a couple hours, all you have to do is ask yourself, if you're long, you should be above the opening price. If you're short, you should be below the opening price. Okay, now both of those trades that I just showed you, the Dow Jones and the S&P, both had that going for them, below the opening price, and was selling it at 382. That's all I'm doing. Now, maybe I put my stop too close. Probably should have put it above the 618, but I didn't want to risk that much. So that's the whole premise of what we're doing. Here was my mistake yesterday. I was looking at this, and the market opened right here. Now, when it opened there, I didn't know that was going to be the low of the day, but it was. When I got to it, it was still sitting here at 351. Okay, so I said, well, I'm going to sell it. There was nothing wrong with doing that. Okay, but the problem was, look, I was above the open when I sold that. And not only that, it just kept going and going. And after about 10 minutes, if we'd have just gone in and done a really quick, let's do a 4-minute chart, and you'll see what happened to that as it was running. Let's get up. There it is right here. See, here's where I was selling, was right up in here. There was the open. All right, I'm selling right here at this 51 level. That's where I'm selling, right there. Now, see how silly that was? You know, okay, I can sell it there, but why would I risk 9 points? Well, I risked 9 points because it's 3% of $363. There's no way I should have been in it above here. But I had no control over it because, first of all, it was a paper trade, but it went above it. That's how you learn how to do this. Yesterday, when I was on the All-Star Charts with J.C. Parents and his group, they asked me what was the best trade that I ever had. And the best trade that I ever had was when I lost all my money in 1974. They said, you got to be kidding. And I said, nope. I said, because that caused me to study. And I studied for 18 months almost 18 months before I put another trade on, and it paid off the right way. I've had some good runs before. I think probably the day of the Iraqi invasion in January of 91, Desert Storm. I was long the S&P. I was short gold and short crude oil. And when the war was going on at 4 o'clock in the afternoon, which was midnight, downtown Baghdad, boy, they were lighting it up like a Christmas tree. And my daughter called me and says, oh, Dad, she said, you're going to get creamed tomorrow. She said, you're short gold and short crude oil and long stocks, and this thing's going to get creamed. And I said, why do you say that? Well, it's in the news. And so I turned on the news, and there was the lights up. And then I tried for 4 hours to get through to New York because it was so busy. That day, crude oil dropped from $32 a barrel to $20 a barrel on the first, dropped $11 a barrel. It dropped 2/3 of its price in one day. It went from $32 a barrel to the next January when it was trading at $11 a barrel. Gold topped that day. It opened limit down, went 2 limits low. Well, didn't go limit each day, but it dropped $100 an ounce over the next few days. And the stock market left a gap that it's never completed. But the problem is they've changed the way they do score. So you don't really see that gap in January of that year. That was a new moon because that's when the Navy SEALs like to attack, is in the darkness of the new moon. The book, the Sun Tzu, The Art of War, was setting on what was his name? Oh my gosh. I can't remember his name anyway, the famous general. Anyway, he kept that book on his desk, much like Bobby Knight did, who was a coach for the Indiana Pacers. They're doing pretty good, by the way. All right, let's get this out of the way here. And since we're doing this, let's just check and see if any of these trades are working. Okay, now the S&P is actually working for a penny. So that's good. Now let's see, where is the old stop in Dow Jones? Now the reason why I did the Dow Jones, folks, is because it's actually most of the time it is a lot. A lot quieter. Now you can see that it's backed off just a tiny bit. This is peanuts, but it did hit where it was supposed to do. It's better to have peanuts than to not have peanuts. That's the way you look at it. So what I would do now, keep your stop working right here. You're only risking on this $200. Right now you've made $100. So just put your stop. If you wanted to, you can. If it makes a new high, it's probably not going to be good, but it's still such a small range. I would leave it there. Keep your stop working right about there. We'll mark that and see if it works. Remember, they don't work all the time. All right, let's move on here to the next one that we want to talk about, and that is crude oil. I'm going to talk to you just a second about something that is dear to my heart that we just did 2 trades on, and that is the 382, folks. Here's crude oil, just the last few days, all right? There's your pullback right here. It goes to 50%. There's 382. There's 50%. Then it goes up, pulls back here. right exactly from that low right here exactly to the 382. Okay, very nice. Now when you have the ABCD here, and you'll see it, there's your AB equals CD, all right? Now you know that this coming out of here tells you that it's going to be so strong, even though it backs off here. You can see it's a lot of strength in here. Plus you have the 382 here. This has to be an extension of at least 1.27. So if you would take that and just mark it as 1.27, you'd be able to see that the high that you want to be looking at would be right up here around 162.36, and the high was 62.52. Misses it by 16 pips, and now you can see it has a nice profit in it on the downside. This was the first chance you can see that something was different, because you see how quickly it broke? That was telling you something was wrong, and then the rally back, and then boom, and we'll see what happens. Stay tuned, folks. We've got Jeff Huge of Alpha Insights coming up, and we'll be right back. 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and I believe we have Jeff Huge in the house. Jeff, how are you doing today, my friend?
I'm doing great, Larry. Thanks for having me on the show today.
Oh, it's my pleasure. We enjoy having you, and we're going to be talking about Behold the Bull Market. Boy, it certainly looks a lot different than you see in the news, isn't it?
That's for sure. I always think there is always a bull market somewhere. It just happens to be in non-dollar assets this year. Everybody's really focused on the S&P 500 and the NASDAQ 100 and the Mag 7, and these are really underperforming dramatically. I mean, the NDX is up less than 2%. The S&P's up only about 1% for the year. The bull market's been in gold, to a lesser extent, Bitcoin and silver. And if we're talking about stocks exclusively, it's been foreign stocks. Foreign stocks have outperformed the S&P by orders of magnitude, up around 15% year to date versus about 1% for the S&P. So I think it's just, one of those things where you just need to be cognizant of where the action is and not remain beholden to what happened last year, but follow the trends, right?
Okay, now we talk about earnings next, Jeff. What are you looking at here when you see these earnings?
Yeah, I think it's a good explanation for why stocks aren't behaving the way a lot of bulls would expect them to be. If you take a look at this chart, you're looking at a 150-year history of real S&P 500 earnings. What do I mean by that? Well, they're inflation adjusted, right? And we're looking at a trend channel with 2 standard deviation range, right? So the middle line is the long-term mean, the average, right? And then the upper boundary is 2 standard deviations above that mean, and the lower boundary 2 standard deviations below. Well, where are we today? We're greater than 2 standard deviations above the long-term mean in terms of where trailing earnings are. And historically, that's exceedingly rare condition that typically precedes a major mean reversion. And that's generally been associated with big recessions and depressions in the past. I think the thing that's interesting now is that the Street consensus is currently looking for double-digit earnings growth this year and next year to carry earnings to, almost parabolic levels. I mean, the out-year estimate's nearly $300, where, the current level's closer to $200. So we're looking for, 40 to 50% upside in real earnings over the next 18 months. I've got my doubts, Larry. I don't think it's going to materialize. And earnings disappointments are what lead to bear markets. And I think we're just at one of those points in time in history where expectations far exceed reality. And a lot of that has to do with the AI narrative.
Oh, boy, I see everything on the news you see is related to AI. I watched Tommy O'Brien show how he's using his 3-year-old grandson. Sorry about that, Tommy. His son, Tommy, is 3 years old, and my gosh, he did his own little comic thing with these little tiny cartoon things, and it was really entertaining. And here he was, like 3 years old, for goodness sake. It's really something. Okay, now here's the one this is the one that should be for me. Who is right about the stock market? What does this mean, Jeff? Explain this chart to us, please.
It's a study produced by Bank of America. And what they did is they looked at 4-week rolling average fund flows from various different entities. Hedge funds are on top, institutional investors in the middle, and retail clients on the bottom, right? And what we see is that hedge funds and institutions have been selling aggressively over the last 4 weeks into the strength. Meanwhile, retail traders have been bidding it up. And in fact, I think a strategist at JP Morgan recently pointed out that last Monday, in the first 3 hours of the trading day, retail traders poured over $5 billion into equities. It was an all-time record extreme, never, ever before in history. And so, what we're seeing is who's carrying the ball here. It's retail traders, it's individual investors, and years ago we used to point to retail traders as being the dumb money, and hedge funds and institutions were known for their investment savvy. I think, following the COVID pandemic, we witnessed a similar dynamic play out for a little bit of time where retail investors were in control. And what ended up happening is those cautious institutional investors were vindicated when a brutal bear market erased about 30% of the market cap of the S&P composite. So the question is, who's going to be right this time? And my view is that the speculators, the retail traders that are trading with extreme leverage in options right now, are going to be the ones that get burned and the cautious institutions that are selling into these extreme highs in valuation where earnings are at extremes and likely to disappoint going forward, they're likely to be correct this time.
Wow. This next one is very interesting to me because I am extremely bearish bonds. And something's wrong with the bond market. They're not telling us what it is, but there's something wrong with it. What are you seeing here, Jeff?
Well, I see a potential catalyst for why the stock market could go down. I think higher yields are definitely something that's going to put pressure, and it's going to add to volatility, right? And I think the recent downgrade of the U.S. credit rating by Moody's, which, really just came into congruence with S&P and Fitch, who had already downgraded it, years ago, has kind of been dismissed by everybody as irrelevant, except for the bond market, right? We saw a really poor auction in Japan the other day and in U.S. long bonds last week. And so we've seen 30-year bond yields press above 5%. And if we get above 5.15%, that breakout could project a measured move to approximately 6.4% using point and figure analysis, which we're illustrating in this graph here. That actually could carry to 7% based on that analysis. And I think in either case, if bond yields move up 200 basis points, you're going to be getting about 70% of the average long-term equity market return from Treasury bonds. I think that's going to create a formidable competitor for stocks.
Yeah, boy, I think so too, because you can see this chart doesn't look very good for the bonds, that's for sure. Okay, the next one we're going to take a look at here is a long-term Elliott wave, and we've got a break coming up here soon, but we can cover this. Well, we're still going up. Look at that little break that we had into April. Looks like it was nothing now, doesn't it, Jeff?
It really does look like it was pitiful, right? A 20% decline is just nothing. We've recovered everything, and it really brings us to a point where we're kind of at we're at the razor's edge, right? We've got two potentialities here. One where the market is topping and ready for an extreme decline. The other where the market's going to break out. And the real question is, what will be the deciding factor? And we've got some ideas on that I want to share with you as we move through this discussion. But our preferred count, which is really a risk management decision, right? We need to be prepared for the worst case scenario and not dismiss it until we get that breakout. And in fact, the breakout may not be what everybody expects. I mean, from a technical perspective, we could see the S&P rally to 7,500 on a measured move basis if the alternate count plays out and if the S&P closes at a new high. But, we saw a close in February, right? And it didn't carry much higher than the December close.
Okay, we'll be back with Jeff Hughes. Stay with us, folks. We'll be back in just 3 minutes.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey, folks, we're back with Jeff Huge, and I have a question. Who is St. Ledger?
Well, St. Ledger is it's actually a horse race. There's the St. Ledger Stakes. It's in Doncaster Racecourse in London, England. And, I think this saying really dates back to the London Stock Exchange where, investors and traders used to say sell in May and go away and don't come back till St. Ledger's Day, which is the day of the St. Ledger Stakes. And that day is actually September 15th every year. So.
I wasn't even, and I like horses. I don't bet international. So anyway, please tell us about this Elliott wave. It looks like it's completing to me.
Yeah, it's debatable, right? So our count has been a 3-wave count down into the April 7th, 8th lows, right? And we think that was wave A of an ABC. We count 3 waves up thus far that topped on the 19th of May, and we think that's a B wave. And we think the decline that we saw into last Friday's low and the rally that we've seen since are waves 1 and 2 of a 5-wave decline that will begin to kick off. Now, what could potentially carry things lower? We have some ideas about that, and one of those key ideas is NVIDIA. And if you go to the next chart, NVIDIA actually is slated to post their earnings tonight after the close at 4:20 Eastern time. The AI narrative has really kind of been the front and center, driver of most bullish equity investors, thinking right now. And the cornerstone, it's the cornerstone of the bull case for stocks. And I think NVIDIA is the cornerstone of the AI narrative. And so, if we take a look at what's happened over the last several months, equity investors have been pretty unimpressed with the trend of the company's growth rate. And that's evidenced by the very punk reaction in the share price following all these numerous growth initiatives and new product launches that they've announced. And meanwhile, we've seen kind of the latest recovery high in the share price. Looks like it's about to mark the right shoulder of a classic pattern top formation of the head and shoulders variety, right? So we've also noticed in the lower panel that momentum has been, lagging, right? We're seeing a negative divergence back in the June 2024 highs, and that led to about a 1-year consolidation period. We're seeing a lower high materialize now in momentum as well. And if we're seeing the high today or this week or last week, the question is, will this negative momentum divergence mark the beginning of a new bear market for AI stocks? I think as NVIDIA goes, so goes the market. If they report a blowout quarter tonight and the stock reacts favorably, we could see a new high in NVIDIA shares, and I would expect the market to follow that. The implied options move is 7% in either direction. So
I know.
Could could go 7% up, could go 7% down. So I would be watching that, and I think that will be kind of the determining factor of what's going on here. So, I would say, we've got a little egg on our face over the course of the last month. We did not expect the S&P 500 to break out above its 200-day moving average. It did. If it closes on a monthly closing basis above the 200-day, then I think the odds of a bear market will be dramatically reduced. However, if we get a bad print out of NVIDIA and the stock trades off aggressively, it could carry the market back below that 200-day, and a close back below on a monthly closing basis would add substantially to the bear case, I think, at this point.
Okay, now you're going to be talking about the perfect portfolio month to date. Yeah. Is that correct?
Yeah. So the perfect portfolio is our model portfolio that we talk about in our newsletter. This is in our portfolio positioning and conclusion section of the newsletter every month. And what the perfect portfolio is a tactical asset allocation that's based on a strategic asset allocation that includes 25% stocks, 25% bonds, 25% cash, and 25% alternatives. We've been aggressively favoring metals, specifically gold and silver, and to a lesser extent, we've had Bitcoin as an alternative in there as well. We've kind of adjusted back and forth. We've had about 20% in gold up until last month, and we split that 50-50 between gold and silver. So we've got 10% gold, 10% silver, 5% Bitcoin. In the alts space, we've got global equities, which have been outperforming U.S. equities as our stock market allocation. That's 25%. Bonds, we have split between long bonds and TIPS. And then we've also got some international unhedged bonds to give us some currency exposure. Currencies have been doing very, very well. And then we've got 25% cash. Now, during the month of May, we've been underperforming the S&P. The S&P is up 6.4, 6.5% through last night. We're up about 2.25%, so we're underperforming this month by 4.25%. However, if you look at our full year performance, which is the next slide, you'll see that this performance, the strategic framework, right, has really produced marvelous results in a difficult market. We actually outperformed in January when the S&P was up nearly 3%. We beat the S&P and only had 25% exposure to stocks. We were positive in the January, February, March, and April months, where the S&P was negative in February, March, and April, and deeply negative in March. This month, we're positive as well. So we're 5 for 5 in absolute returns this year. The S&P is just beating us a little bit. Year to date, our model portfolio is up 8.5% versus a little over 1% for the S&P. So,
we're 8%. That's a tremendous. Health. Yeah. Wow. Yeah. That's better. That's 20% a year. That's awesome.
Yeah. 755 basis points of positive alpha year to date. And so, if anybody's wondering if there's any value to our newsletter, I think that's the answer to the question right there.
And the answer to that question is yes. So tell us about the newsletter, Jeff.
Yeah, we publish a newsletter every month. It's called Huge Insights, The Big Picture. It's available on Substack at hugeinsights.substack.com. In that newsletter, we cover a variety of macro, big picture views, lots of models and charts and, macroeconomic and market views, stocks, bonds, currencies, commodities. And we give half the newsletter away for free every month. The other half, which is kind of a really deep dive into our analysis of markets and our positioning and portfolio recommendations, we charge a little extra for that. If you want full access, it costs as little as $15 a month to buy a subscription to Alpha Insights. And we also provide some additional perks for paid newsletter subscribers. It's a monthly newsletter. The next issue comes out June 7th. But we also offer a weekly update. And we publish a note called Alpha Insights Idea Generator Lab every Wednesday. So one will come out this afternoon. And we give an update to our market views. And we give our top actionable trade idea every week after the close on Wednesday. So I want to offer your listeners a special deal. We ran a Memorial Day special for new subscribers. That's subscribers that have never heard of us before and want to give it a try. We'll do an annual subscription for just $99.
Boy, that's good. Hey, Jeff, thanks for joining us. I've got this posted. Go ahead.
Listeners, send me an email if they want to take advantage of that deal.
Thank you so much, Jeff. We'll see you in a couple of weeks, okay, buddy?
Thank you, Larry. Take care.
Okay. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, if you did the Dow Jones trade or the S&P trade, you're $400 ahead, so don't let it go to a loss. So basically what I'm telling you, but that's my 2 cents worth. Now, this is what Jeff was talking about. This is weekly NVIDIA. There's a left shoulder back here in June of last year, 2024. Here comes your right shoulder. You see it's lower than the left shoulder, has beautiful symmetry, and we're setting almost exactly at a Fibonacci number as we come in here today, almost exactly at the 78% level. So I have to say what Jeff is talking about is the odds favor this is going to be bearish. And now that's all it is probabilities. You can see lower highs. Okay, that's what you're looking for. The most it'll be up. Hey, I'm just giving my 2 cents worth. If we gap up above here, this is certainly going to be wrong. And of course, they're betting 7%. That means about a 10% move, $10 move either direction. Now, if it's something really nasty, then it'll be something like this. But this is where you want to be doing it. Now, if you have to play the game here of puts and calls. You either have to decide you're going to buy a put that's going to cost you $10 roughly. Okay, so you're going to get, if it opens $10, you're going to get tagged for that. But if it opens $20, the only thing you're going to lose on is the $10. So I would have to, given this chart, because it does move a lot, I would rather pay that $10 insurance right now and bet that it's going to be lower than higher, because they're betting that you have to put $10, 7%, in order to play that put option. They're saying that we're going to give you the put, but we're going to charge you for it because it's riskier to us. Back in here, you could bought puts for nothing. Nobody thought it could ever go down. Now, because of this move here, oh, yeah, it can go down. So that's why your put premium has gone through the roof. So for a paper trade today, we're going to take that money that we made on the Dow Jones and the S&P, and we're going to buy a put here. I'm not doing this, folks. This is just, cannon fodder from the old cowboy. But that's what I would be doing if I were a stock trader, and I'm not. We'll see you on the flip side tomorrow, boys and girls. And our guest will be Norm Winsky.